Let me pause, right? Take it in. With what you know now, if you have a salary of 99,000 and they're offering you 10K pay rise, you need to understand that almost half of that is going to be tax. Hey people, welcome back to Bricks with Tips. My name's Tayo, co-founder of Bricks with Tips, which I founded with my wife, Antoinette. Now, if you're new here, this page is all about teaching you how to be better with your money, achieving your financial goals, and achieving your property goals as well, whether that's in the UK, in Africa, in the Middle East, in the United States. We have people everywhere. But today we've got an important topic for you. We're going to focus on the UK today, and we're going to talk about the taxation system in the UK. We're going to be talking about the 60% tax, the stealth tax. Now, I just want to grab you right here. Some of you may be thinking, why do I need to know about this? I pay 40% tax, I pay 20% tax, I may pay no tax. This is why, if you're new here, you need to understand that this is an aspirational channel. And I'm going to tell you a little story, right? I remember maybe when I was about 21 years old and I was studying to be a financial advisor. We had a few main studies, right? Some of it was on regulation, investments, financial protection, the things that you'd kind of think are standard to have in the financial advice papers, right? But one of them was tax, right? There was a whole study, a whole exam, a whole kind of like portion of it, chunky portion of it on tax. And when you're going through that module, you realize that tax becomes a problem when you are wealthy. So sometimes having a huge amount of tax, right, or having to navigate the tax space or having to become tax sufficient is an indication that you've become wealthier. Do you agree with that statement? Let me know in the comments below. I'll say the statement again, right? When you have to navigate tax more or you have to become hyper aware of it, that is an indication of how much more wealthy you're becoming. And you could quote, depending on what you measure it on, it could be a measure of your success. Do you agree? Anyways, guys, you may have been hearing about people talk about the 60% tax all of the time, and it may be going over your head. So what this video is intended to do is help you guys understand that. So guys, in this video, we'll be talking about why this tax exists, who it affects, how much of the year you'll be working for free, if this applies to you, and finally, how it compares to other countries. Let's do this. So guys, if you know how tax in the UK works, you know that your personal allowance is free. So your personal allowance is £12,570, depending on what year you're watching this video, right? And that means that that first £12,570 you earn is tax free. Now, the next chunk of money you earn is subject to 20% tax. That's the basic tax rate. The next threshold after that is subject to 40%, and that's the higher rate. And finally, you have the section after that, which is 45%, and that's called the additional tax rate. Now, the reason I haven't mentioned the thresholds is that they change quite frequently, and I want this video to be evergreen. But just so you know, how it works is that in the initial stage, that section is tax-free. Whatever you earn from 12,570 upwards until the next threshold is subject to 20%. So not everything, just that section. Then the next section is subject to 40%, just that section, not the whole salary. Hopefully that makes sense. But here's where it gets interesting, right? And you could describe this as burning the candle at both ends, right? In the UK, once you start earning over £100,000, it starts chipping away into your personal allowance. So not only are you being taxed more on this end, it's reducing your tax-free status at the bottom end. Hopefully that makes sense. So for every £2 that you earn over £100,000, they knock £1 off your personal allowance. So if you earn £101,000, that's £1,000 over 100K, they will knock £500 off your personal allowance. Now, let me explain to you why that's important, right? Because there's so many different levels of taxation, people focus on what's called a marginal tax rate or an effective tax rate. And what that means is that how much are you being taxed kind of on average through all of the thresholds. So when you think about it, your 12,570 tax-free status has a huge impact on your marginal tax rate because it's completely tax-free. Whereas in some cases, that might be 20%, it might be 40%, it might be 45%. That 0% tax rate has a huge impact on the overall tax that you pay. So when you remove £500 out of that, it has a big difference. So let me throw some numbers at you, right? By the time you've earned £125,140, your whole personal allowance would have evaporated. It would have been taken away from you. At this point, all of your income is either being taxed at 20% or at 40%. No personal allowance. Let me give you some real world examples. So let's say you got a pay rise and you earn £110,000. That £10,000 over 100K is at the 40% tax rate, right? So you're gonna pay £4,000 tax on that extra £10,000 that you earn. Now check this out. That extra £10,000 over 100K is going to reduce your personal allowance by £5,000, making it subject to 20% tax. So not only are you getting taxed 40% on the extra £10,000 off 100k, over 100k, which is £4,000 tax, because it's eating away at your personal allowance at this end. Remember I mentioned burning the candle at both ends. Because it's eating away at your personal allowance at this end, it brings £5,000 into the 20% threshold. So that means you're going to be taxed £1,000. So together, that extra 10k that you earn over 100k, you're going to be paying £5,000 tax on it. Let me pause, right? Take it in. With what you know now, if you have a salary of 99,000 and they're offering you a 10k pay rise, you need to understand that almost half of that is going to be taxed because of that little period between 100k and 125,140 pounds. Now I'm going to move slightly away from the 60% marginal tax because it mainly occurs between 100,000 and 125,140 pounds, right? Let's talk about when additional tax rate kicks in. That's your 45% on anything you earn over a certain amount. So just so you know, I'm going to be comparing the top rate of tax for various countries for employed people and the threshold that kicks in at, right? So the UK, the top rate of tax is 45%. It's called the additional rate, and it kicks in at £125,140. Moving on to the United States, the top federal rate is 37%. And for a single filer, that actually kicks in at income over £609,350. That is crazy. One thing to note though, in the United States, they have federal tax and they have a state tax as well. But 609,000 is a good threshold. I'm going to talk about this at the end. In Germany, the top rate is 45% and it applies to income over €277,826. In France, the top rate is 45% also, and it applies to income over €180,294. In Canada, the top federal tax rate is 33% and it applies to income over $246,752 Canadian dollars. And in Australia, the top rate of tax is 45% and it applies to income over 190,000 Australian dollars. And then also finally, the UAE doesn't have tax on income earned through a salary at all. I want to go back to the dollars though. The dollars, they are at 37% on income over $609,350. There's something about the US, right? They drive aspiration. It's almost in their culture. I might do a separate video on this. Let me know in the comments if you want me to speak about the US culture when it comes to aspiration, when it comes to having a dream, right? I say this a lot in passing. I don't think I've ever said it on a video. They have the American dream that they live by. They're all of them are dreamers across the nation. They always believe there's going to be that change. And I feel like the country facilitates it as well, right? They give them room to dream, room to breathe, room to earn more, room to fail and start again, room to have an entrepreneurial spirit. They reward excellence, right? The rule in the US is funny. It seems like a simple rule. The rule in the US is that if you are skilled, you are paid well. If you are a surgeon that can deliver X amount of surgery or something, you haven't necessarily got to go super private and open your own practice. A company is going to see your skills and they are going to pay you accordingly. If you are in sales, they will reward you handsomely. If you are a sports person, you will be paid extremely handsomely. And no one is going to say, why are you buying your mama a house? We'll leave that for another conversation. Anyways, guys, to round up, we're going to revert back to that figure between 100k and 125,140 pounds, right? It's very, very interesting because more and more people are falling within this category. People that work in tech, people that work in finance, and so on and so forth. There's actually 1.2 million people in the UK that fall within this threshold. And unfortunately for them, it basically means that they're working January till May for the government. And they only really start earning for themselves after that. Let me know what you think about this tax rate. Let me know what you think about the comparisons compared to other countries in the UK as well. And let's have a discussion in the comments below. Thank you once again for tuning in to Bricks with Tips, and I'll see you on the next one. Peace.